Hi, everyone. Welcome to Financial Insights. I'm Linda, your accounting coach. So, we are continuing our conversation regarding the ABCs of nonprofit finance. So, today we're going to discuss financial statements. Nonprofit financial statements are similar to small businesses, but there are some nuances. So, the number one difference is that in the nonprofit sector, we call the statements by a different name. So, you may hear profit and loss, balance sheet, that's okay, but just remember there are different names for those financial statements. So, first, I want to discuss the foundation of financial statements. You may have seen this slide before. I think it gives a picture on how financial statements are created. So, if you look on the left hand side, there's a box, and we have bank account transactions, we have journal entries, invoices, bills, and checks. All of those financial transactions, they go into the chart of accounts, or they go into a particular account. So the chart of accounts is basically categories. So you have salaries, you have rent. On the revenue side, you could have a donations account, you have a grant account, you may have sale of product or services. So it's very important that your chart of accounts is set up correctly. So all of those financial transactions, they go into an account that's on the chart of accounts. Depending on the type of account, it dictates where that account shows up on the financial statement. So the chart of accounts, you have that, and then you have your accounting software. That accounting software basically spits out the financial statements. So if you are using an accounting software such as QuickBooks or Wave or Zoho, if you picture it, you have your chart of accounts, and then you have all of your bank transactions, you have your credit card transactions, you could have journal entries that your accounting professional performs, you have your invoices and your bills. All of those are summarized on the financial statements. That's all the financial statements is. It's just a summary of all those financial transactions. So instead of you looking at a report that has 50 to 100 or 200 transactions, the financial statement summarizes all of those transactions for you in a neatly format. So, financial statements, of course, they're always used for a purpose. And just similar to small businesses, financial statements in the nonprofit sector is used for 990, used for audit, for loans, for grants, line of credit, if you have to report to government agencies and even donors. So, financial statements very, very important because in the nonprofit sector, we have many internal and external stakeholders that we have to report to. So, what are the financial statements? So, in the nonprofit sector, we have the statement of financial position, which is the balance sheet. We have the statement of activities, which is the profit and loss. So, and we also have the statement of cash flow. So, going back to the statement of financial position, really simple, it's just listing your assets, your liabilities for the nonprofit. Statement of activities, where most organizations focus on, is listing the revenue. So that could be your contributions that are coming in, your donations, your grant, or even income if you sell services, if your clients pay for services, and of course expenses. Then we also have the statement of cash flow. So these are the three main financial statements that nonprofits should be reviewing, and I would say these are the three. However, I'll give you a little secret. There's other financial reports that you want to be diving into. So you want your accounting professional to actually create a cash projection, estimating when is cash coming in and when is cash going out. Because as we know in the nonprofit sector, grants, donations, they all have a timing. So you want to make sure that you have enough in the bank to cover when income is not coming in. Then we also need to be reviewing your budget, estimating your revenue, estimating your expenses, creating a budget, also forecasting, another important report. So I call this the secret, pulling back the curtain. Understanding your financial statements, those three, you also need to run additional reports to understand what is going on financially. So you have to run your accounts receivable, you have to run your accounts payable, you have to run your grant report, okay, saying, okay, these are all the grants we have. This is what's been spent. This is what is remaining. And then also looking at financial ratios. So, as you can see, it's more than just looking at the financial statements. You want to really have a financial package. And once again, I almost call it like pulling the onion. So, when you look at the financial statements, and for instance, if we look at donations, you want to pull back the onion. You want to say to yourself, okay, for those donations, where are those donations coming from? Is it coming from a specific donor? Is it coming from specific corporations? So you want to understand that so you can actually maintain that, or you know what, maybe you need to tweak the process, change some things up to garner more donations. So that's what I mean by pulling back the curtain, pulling the onion. You want to know where that number is coming from. What are the drivers? So remember, just because you're looking at the financial statements, also look at additional reports. So I suggest, you know what, you look at the last 3 months of your financial statements and focus on revenue. Look at the last 3 months and ask yourself, what is the trend and what was the drivers? Was it a specific donor? Was it a specific grant? What is it? Was it a specific fundraiser? Ask yourself those type of questions so that way you can maintain, or you know what, ask yourself, okay, how do we need to increase donations? So take a look at the last 3 months of revenue and understand where that revenue is coming from and what those drivers are. So hopefully you find this information helpful. Make sure you like, comment, and share, and we'll see you next week. Take care.